Hey, what's up, guys? It's Larry, the mortgage guy, your mortgage insider, and certified veteran mortgage advisor. And if you bear with me, I just do a quick sound check because there's been plenty of times where I went live and my sound didn't work. So I want to make sure that it's working. So just bear with me. Do a sound check on my phone. If I'm streaming right now live to my timeline, then the video should be showing on my phone, and I can hear this. Yep, the sound works. All right, cool. Starting over. Hey, what's up, guys? It's Larry, the mortgage guy, your mortgage insider, and certified veteran mortgage advisor. And I'm really excited to do this class for you today because I'm going to tell you how to save thousands of dollars on your closing costs. And when I talk about saving $1,000 on closing costs, I'm talking about money out of pocket. Also talking about savings, not just maybe shifting cash to close to financing it, but also how to literally just spend less money, right? So let's go ahead and share the screen here. And of course, if you have any questions, you always unmute yourself and ask the question, or you can always type it in the chat if you're watching this through a live stream, like on Facebook, LinkedIn, YouTube, or Twitter. Okay. All right. So, home buyer secrets that most loan officers and real estate agents won't tell you. Okay. What I mean by that, there's information here that I'm going to share with you that most loan officers and real estate agents just either don't know, or they don't want to tell you, they're too lazy, or they're hiding from you, or they're just maybe rushing through the process. Okay. Also, if you wait until the end of my class, after the Q&A, I will tell you how to save $500 off your closing costs when you buy your home. Okay. And this is for clients, but also if you are a real estate agent or loan officer, you can actually tell them about this. Okay. My why, I'll do it real quick. My wife and my kids, my two boys, Bruce and Hunter, because they're on the spectrum for autism, and I want to get ABA therapy for them. Okay, it's pretty expensive, so my goal is to get enough resources to start that process for them. I also want to help veterans. Described here in my Facebook post, my father was living in Da Nang, Vietnam during the fall of Saigon. My mother was living in Saigon. My father left by helicopter, and my mother by boat. It was U.S. soldiers who helped them get in the helicopter and on that boat, and they both met in Hong Kong, China. If it wasn't for a U.S. soldier, my parents may not have survived, met, and had me, and I wouldn't have what I have today. I might not even exist. Those U.S. soldiers are veterans now, so thank you, vets. I owe you my life, and I literally mean that. Like, my parents were in different parts of Vietnam; they didn't know each other, and they may never have met each other. But because they were both refugees of the Vietnam War, they met at a refugee camp in Hong Kong, fell in love, and that's when I came to existence. Okay, so if it wasn't for Vietnam U.S. soldiers in the Vietnam War, they wouldn't have survived and I wouldn't be alive. So they're veterans now. So I feel like I owe them. That's why I want to help. Now, I used to have a long description as to what my mission is, but I'm just going to give you a quick story. The reason why I do what I do is because when I applied for a mortgage 2, 3 times, I was mistreated. I didn't qualify, apparently, but I didn't know why. They didn't give me a good reason. The first time I was basically ignored. It was a larger bank. They just didn't answer my calls, text, emails, whatever, and I got a letter saying I was denied, but no explanation as to why, and what to do. Right. The second lender, it was referred by a friend, and they denied me, but they kind of gave me a plan. They didn't really tell me what I need to do. But I actually joined the mortgage company, the same company that guy worked at, and he was no longer there. And I actually looked at my file and saw that he actually did it incorrectly. I would have qualified if he just structured it differently, and it was bad because I lost my house that I was trying to rent to own, and I couldn't qualify to buy, so I lost the house. I had to go to an apartment. It turned my life upside down for my wife and my kids. So negligence and lack of experience and knowledge from that one loan officer basically costed me a lot of money, a lot of time, energy, and heartache. Right. So I don't want that to happen. So I want to educate you guys, and I want to put a higher standard as to how loan officers should treat people, and at the same time make myself accountable. Right. I'm educating you guys for two reasons. Number one, I want you to be prepared, but number two, I want you to know that there's people out there that will help you no matter what situation you're in. Okay. So let's get into the content. How much money do I need in order to buy a house? Because we're talking about closing costs, right? I'm going to go through these real quickly because I think it's more important for you to know the tips or advice I give you instead of the actual information, because you can find this on Google or you can talk to any loan officer, and for the most part, they'll provide for you. But down payment is required 3% for conventional if you're going with a home ready, home possible, 3.5% for FHA. For the most part, if you're above 580 credit scores, if you're at 500, you have to put 10% down. 5% for normal conventional, which is what most people would do. 20% if you want to avoid mortgage insurance, which a lot of people think that's the standard, but it's not. That's something that you can put down if you want to avoid mortgage insurance. Otherwise, you will be paying for it for the most part all the time for FHA and conventional if you're under 20%, and 0% down for V and USD, right? Now, when I put closing costs without taxes, you have to understand what I mean by that is prepaids, right? Like the stuff that you're going to pay for anyways, whether it's your taxes or your insurance, and people escrow that, right? So I'm basically talking about how much your costs are going to be or cash to close, whatever, without the escrow part. Okay. So you got lender fees, loan application fee, prepaid interest, origination fee, broker fee, underwriting fee, processing fee, mortgage insurance, and rate lock or the extension. Okay. More closing costs without taxes, third party fees like title search, appraisal fees, attorney fees if you're in Texas for sure, credit report fee, property tax fee, homeowners association certification fee, notary fee, VA funding fee if you're going to VA loan, FHA upfront mortgage, insurance premium if you're going to FHA, and USDA guarantee fee, right? These are prepaids. These are the things I was talking about. The reason why I don't talk about this because I guess them 2,000 to 4,000 for these costs, right? 2,000 to 4,000 ish, right? But the prepaids and tax and insurance, that's going to be depend on your house, how big your house is, what your neighborhood you're in, the neighbor, the different things that makes the house more valuable, because a lot of these insurance and taxes are based on a percentage, right? So that's going to be like your prepaid interest, prepaid taxes, flood insurance. You have to pay for mortgage insurance, property taxes, and flood insurance as well in terms of prepaids as well. So you have initial escrow, and then you have basically future payments, right? That you got to put into an escrow account. Okay. So I actually say the general rule of thumb is 10%, right? So if you're buying a $100,000 house, plan to have $10,000. 3,500 goes to closing costs, and the rest, 3,500 goes to down payment, and the rest goes towards closing costs. Plus, you might need reserves. Reserves is money that you need in the bank after you close, not something that you would give up at closing, but you have to have that left over, right? So maybe 1 month's worth of reserves is one mortgage payment, 6 months of reserves would be 6 mortgage payments, et cetera, et cetera, et cetera. Especially when you're buying an investment property, you have to have 6 months of reserves, period. Okay. That's something a lot of people don't realize. They need 20% down for the most part and 6 months of reserves. So come correct when you decide to buy investment homes. Okay. So quick tips about funds for closing. Number one, your funds must be sourced. So no large cash deposits in the last two statements. So basically cash is not king in this case, right? Gifts on conventional and VA do not have to be sourced if it's transferred straight to title. What I mean by that is if you're buying a house and you have a person that's going to gift you the money, a donor, and you're doing conventional VA, you don't have to supply any kind of bank statements if everything's covered by the gift, including the EMD or earnest money deposit, right? Like basically you maybe wrote a check out of your own bank account, but you don't want credit for it because you don't want to give bank statements or whatever. Then you subtract that 1% or 1,000 or 10,000, whatever you put down, you subtract that from what you originally are credited towards, and that needs to be added to the gift because you're not going to get credit for it, and you just get refunded after closing from title for that deposit that you made. Right? So basically, just count it as a deposit, and it disappears when you actually close because the gift is going to cover all your closing costs. Okay, if this is the case, then you do not need to source your funds. You don't need to provide bank statements. And the donor does not need to provide bank statements as long as there's a gift letter and it's correct and it all matches up. Once the receipt is the funds are received in the title, if it matches, then you're good to go. Okay, a lot of people don't know that. It's makes life a lot easier if you can do that. Okay, money markets, including cryptocurrency, can be used. In fact, if you read the guidelines, it actually talks about it. Right, that is kind of interesting because cryptocurrencies, Bitcoin, does that count? Well, if it's written in the laws, then it does count. Number one. And number two, the fact that the government acknowledges it tells me maybe they know something we don't know. Maybe it's not going anywhere, but that's for another conversation. Okay. USDA allows value above purchase on appraisals to be used towards closing costs. What I mean by that is, let's say you're buying a $100,000 house. The house appraises for $120,000, so you actually have an extra $20,000 in equity. You can actually apply that as part of your closing costs. I don't know all the math, and I don't like doing public math. I don't like doing public math, but that is a concept. That is a mechanism for USDA loans. Okay, so kind of a cool reason to go USDA, especially if you know you're buying a house that's that's undervalued, meaning the price is a lot lower than what you think it's worth. Okay, you have to have 6 months of reserves required for investment loans. Again, I talked about that, right? You must have 6 months of reserves. Basically, they're not going to let you go into business to make money on a property unless you have backup, 6 months worth. Okay. There are down payment programs available in all states. Down payment. Okay, actually, let me answer this. Let me talk about this first, and I'm going to answer this question here. There are down payment programs available in all states. What I mean by that is there's some state funded bonds and stuff like that for down payment assistance. For Texas, there's like TSHAC. Don't ask me what that stands for. There's Seth, right? Southeast Texas Housing something, maybe. I don't know. And there's TDHC. I forgot all the names, okay? But there's Texas related down payment assistance programs, and it's only for Texans buying in Texas, right? But there are programs, no matter what state you're in, that can be applicable in all 50 states, just so you know. Okay, so be on the lookout for that. If you're in a state that I'm not licensed in and you don't know, ask your lender. If the lender says there's no down payment assistance programs, BS, there is. They just don't have access to it. Okay, find a lender who does have it, or you can reach out to me. I'm going to refer you to someone. Okay. All right, cool. So before I move on, there was a question. Facebook user asks, doesn't USDA have an income limit? Yes, USDA does have an income limit. And you can actually check that. I actually have a video on YouTube where you actually see, if you make too much money or whatever, it's like a quick pre-qualifier, but you plug in information like your income, how many children you have, et cetera, et cetera, et cetera, and it tells you what your income is based on what you said, and if it fits or matches like the area's income limits, right? And again, there's a YouTube video, a video on YouTube that I made about this. But if you really want to try it out, just look up USDA qualifying, whatever, and I think it's gonna be like RD something, but you'll know that you're officially up in the USDA website, and it'll actually allow you to do like a pre-qualification. Like there's a link or an option for it, right? I can't, I don't memorize it, so you just have to go there and check it out for yourself. Maybe in the video when I do for YouTube, I'll cut into that little clip and show you. Okay. But yeah, and if we have time, Facebook user, and we're at the end of the call, I'll maybe even go to the video to show you what I'm talking about. Okay. All right, cool. So and the reason why, just so you know, USDA does that is because obviously they want to help people move into houses, but they want it to make sense, right? Like if you make too much money, then why are you needing down payment assistance, or why you need zero down, right? So they're really trying to help people who have lower incomes, or maybe like the reason why I talk about the family thing is because they actually give you a bigger allowance or a more flexibility if you have a larger family. Okay. But they want to know how much everyone makes. So if you have like 5 kids and all 5 of them have a job, then they will need to know how much those people make. Okay. That actually is a factor. So it's a very weird loan compared to the rest of them, but it's a really great loan if you can qualify. Okay. And of course, if you're looking for a home in a rural area. Okay. All right. Hopefully that answers your question, Facebook user. And again, if we have time, I'll show you like clips of the video or whatever, where I show you how to find out more information about your income and if it qualifies. All right, cool. So crazy exception time, because I know that people might get bored with slides and facts and figures and charts and graphs, but people always remember stories. Okay. So I have successfully helped several veterans buy a house using VA loans where they brought absolutely nothing to the closing table and got a lower rate bought down. What I mean by that is I've helped veterans. It's not just exclusive to veterans, but veterans are the ones who are getting zero down, right? USDA also gets zero down, but I've actually helped several veterans show up to the closing table and had no check, nothing wired, nothing. They paid nothing, not one penny. Okay. And the rates were lowered. Okay. So I'm actually going to kind of talk about how you do that in future slides. I've also successfully saved many clients several thousands of dollars on their closing costs when they bought a home. And again, I'll share how on a later slide. And I constantly save homebuyers $4,000 to $8,000 on closing costs, even if they do not do the loan with me through my coaching, my guys. What I mean by that, I've actually helped people, veterans included, save multiple four figures, even maybe close to five figures in closing costs, even though they're not using me as on the loan. Like I'm not the loan officer. Okay. Yeah, it's something I do. Okay. And again, I'll talk about that in later slides. Moral of the story: not all lenders are created equal. Who you work with matters. And you'll see me say that all the time. I actually use that as the hashtag as part of my branding. And you should always ask for a second opinion and make lenders compete for your business honestly. When I say honestly, I'm talking about factual. I'm talking about like actual quotes that can't be changed, not just advertisement, not just talk over the phone. Yeah, I can probably get you a 4 or 5% interest. No, an actual locked loan estimate. I'm gonna show you how to do that. Okay. All right. So home buyer secrets for all home buyers, right? Number one, make lenders compete for your business for the best rates. Again, I'm gonna show you in the next slides how to do that. APR is actually more important than rate. Double check both the rate and the APR. And again, I'm gonna talk about that later as well. The only way to get a real quote is to get a locked loan estimate. Never use a lender who charges an origination fee as a percentage. What does that mean? Is when you look at the loan estimate and the origination charge is 1% or 2% or whatever the number it is, that's you're getting ripped off. Unless you're buying unless you're getting like $100,000 loan, you're getting ripped off. For example, if I charge 1% on a $100,000 loan, I'm charging $1,000. If I charge 1% on a $200,000 loan, I'm charging $2,000. If I'm charging 1% on a $300,000 loan, I'm charging $3,000. Okay, so it's based on the value of the home or the value of the loan, whatever, right? My fee is actually under $1,400 across the board, whether you're buying a $50,000-$60,000 house or a $2 million house. Okay, with some nuances. Okay, but for the most part, my origination fee is under $1,400. Okay, so for $100,000 loan, that might be a ripoff. But for a $400,000 loan, that's a deal, because a 1% origination fee lender will charge you $4,000. I'm charging $1,400. Where does that other $2,600 go? Right. So yeah, when making offers, make the price higher by the maximum seller concessions allowance, then ask for that amount from the seller. What I mean by that is, let's say you're buying a $100,000 house FHA. You can get up to $6,000 in seller concessions because it's 6%. So instead of offering $100,000, offer $106,000 and then ask for $6,000 in concessions. Okay. Now, of course, in a buyer's market, you can ask for way more than that. You can be like, okay, you know what? I'm still going to offer you $100,000, but I want $10,000 in seller concession. Well, actually, 6,000 the max, right? So I'm buying $100,000 house. I'm going to give you $100,000, but I want 6% or $6,000 in concession, and that's like a negotiation. That's like a counter offer. That's like basically offer them $94,000 for the house, right? But what I'm saying is, if you're in a situation where you want to win the offer, make everyone happy, and everyone ends up being the same, this is a way where you can actually finance your closing costs. Okay. So let's say you're in a situation where there's no way they're going to change the price, but you have closing costs and you want to finance it. It might be $10,000, might be $8,000, might be $2,000. I don't know what the number is going to be, right? But you can get a max of 6% seller concessions. So you ask for $106,000, ask for $6,000 in concessions. That's 6%, right? And everyone ends up being the same, meaning the seller still nets the same amount of profit. Okay. And you get to finance $6,000 worth of closing costs, because let's say you have to bring $10,000 to the table with the concessions. Now you're only bringing $4,000 to the table, and $6,000 is added to the cost of the house, which you're making payments on anyways. So that's a way that you can save a lot of cash, your cash reserves, your assets, in terms of closing costs. I'm not saying that this is going to cost you less in closing costs. I'm saying it's a way to save your cash reserves, a way to save your assets, right? And basically qualify, because some people don't qualify because they need $10,000 and they don't have $6,000 or $7,000. Well, they need another $3,000. Ask for concessions, okay? And even if you have enough, for closing costs. You can ask for concessions to help you pay down the rate or buy down the rate, right? That's a very popular thing that's happening right now is people taking funds that they have in excess of and using it to buy down the rate. Okay. So again, when making offers, make the price higher by the maximum seller concession allowance, then ask for that amount from the sellers. And again, you can lower your interest rate using seller concessions, which I just talked about. Okay. This is an example of the fees being charged by the lender. You'll see it on page 2 on the loan estimate on the very top left, right? Actually, left this over here for you. Okay. You'll see it on the top left on page 2. And these are actually my fees. This is a screenshot of my fees. Okay. $895 for processing and $500 for underwriting. $1395. I would say that that's below average because most places I've worked has been more than this. Okay. But this is what you should be looking at. You should not see 1%. 1% is you run from that. A lot of the big box online friendly or veteran friendly lenders use a percentage. I tell you what, with VAs, it actually screws a lot of things up, and that might be for another conversation. But just so you know, it's a lot of things happen when you charge 1% on a VA loan. It can create a lot of barriers or issues or drama. Okay. All right. So the next question that a lot of people ask is, how do I get the best interest rate? And I'm going to show you. Okay, how do you get the best interest rate? See, a lot of people ask me, what is the interest rate? And I think that's a silly question. I think it's actually comical because you're basically asking to be lied to, right? It's like, oh, you know what? I want you to go ahead and quote me some random arbitrary number that's not going to matter because I don't have a contract with you. I don't have an application with you anyways. So what you tell me today is going to be different if I were to apply and give you a contract tomorrow, or it might be different that day, right? So asking what are the interest rates is a stupid question in my perspective. Now, how do I get the best interest rate is a great question. Okay. So I'm going to read this real quickly, but I kind of broke it down as well in steps. Okay. So you choose your second favorite lender, you apply, get pre-approved, you find a house, get it under contract, and then you send it to the lender. The lender will give you disclosures, will request a rate first and lock that rate if you like the rate, whatever, or it's the lowest rate you think you can get, lock the rate, and then have them send you a locked loan estimate. And I'll show you what that means. And don't sign it. Don't do anything with it. Just go to your second favorite lender, or actually go to your favorite lender, because I think you should give your favorite lender a chance to compete, not the other way around. Okay. So what I mean by this, you have two lenders. You have lender A and lender B, right? Lender A is your favorite, lender B is your second favorite. So you go to your second favorite lender, you do all the work with them, get a lock loan estimate, and you give lender A a chance to match it or beat it. If they can beat it, of course, that's a no-brainer. But if they can't beat it, but they can match it, then you decide, do I want to go ahead and lock with him? Because even though it's the same rate, I'm not really gaining anything except for the fact that I get to work with my favorite lender, right? So again, and you can repeat this if you want more than one option, right? But then, yeah, once you get the lock loan estimate from your second favorite lender, you go to your first lender, right, or your favorite lender, and do the same process. Get it pre-approved, show them the contract, and ask them to look at the lock loan estimate from the second, and ask them to beat it. If they can't beat it, see if they can match it. If they can't match it or beat it, then you ask them to float for you, right? So you still have them working for you, although you're actively working on the second lender because the appraisals gonna be ordered. You can't order the true appraisals. You don't want to, right? Title work's gonna go be connected to your second favorite lender. So the price gonna be more on this side. But then the moment the rates were to go down, and you're already locked here, so you can't change this rate, but this rate can change, right? So you're locked here. But let's say the rates go from 5 to 4. Well, heck, I want to lock the lower rate now. So now you pivot to your favorite lender, and then you basically stop the process with the second favorite lender and go with the first lender because they can lock you at a lower rate. Okay. That's the floating method. Okay. Special notes: once the rate is locked, you cannot change it. It can only expire. And this is why you lock with your second favorite lender first. So it's okay. And you do that so you can float with your first favorite lender. And it's okay to tell your second favorite lender that you're shopping. You can actually tell both of them, hey guys, I'm basically shopping two different lenders. Right now I'm going with you because I like your rate better. I'm locking with you. And I'm sticking with you. But if the rates will go down or something happens or I don't like the way you're working, I'm going to go ahead and move lenders. So I just want you to know that there's another lender who's ready to work for me. You tell that to your second favorite lender, and you tell your favorite lender, he's going to know anyways, he or she, because you're already locked with that person and you're proceeding with that person. They already know that you're shopping, and their hope is that the other lender screws up or the rates go down, and you're like, yeah, dude, you're locked at a 5 with that guy. I have a 4 now, so let's go, right? So again, I read that really fast, but I'm going to break it down for you too. But just so you understand, most loan officers are going to tell you this on how to basically uh, get the best interest rates. Again, save thousands of dollars because that's what you're doing. I mean, the difference between a 5 and a 4.5 is major, like thousands and thousands of dollars, like 10 figures. Okay. So, of course, they would tell you get your credit scores as high as possible. However, you do that, have low balances, which makes perfect sense. Have a credit plan or credit repair, which I do, right? Not the repair part, but the plan I can provide. And of course, there's other questionable methods, which I'm not going to really talk about, but there are unethical ways to get your scores up. Okay. Now, not all loan officers are going to tell you this, but I just told you get two competing loan officers, right? Focus on APR, not rate. APR. Okay. The rate is a distraction. Okay. Get a locked loan estimate from the second favorite lender and compare. The decision should be made easy. In worst case, let the rate lock expire and wait 30 days. That means if let's say you have your locked rate with Mr. Lender B or your second favorite lender, and lender A is supposed to float for you and lock if there's a lower rate and the rate never goes down, right? Or this lender just gives up and doesn't want to talk to you. And let's say the rates drop dramatically, right? You can actually go ahead and just let your rate expire, but you have to wait 30 days in order to redo it because most lenders are going to require you to either take the same rate or the worst rate, a worse market rate at the time. So you can't go up. You can't get in an improving situation. You can only go in a worse situation. Okay. So you're going to get the worst. Either it's your rate or the current market rate. So let's say your rate that you locked that you let expire was 5, and the rate and the market is 5.5. They're going to force you to go with 5.5 if you want to lock it. Right. So you don't want to do that. Right. Worst case pricing is basically what they call it. Right. So you got to wait 30 days and then you could lock it at a new rate, whatever. Right. But that might not go over well with the person you're under contract with, right? Like, not only are you waiting 30 days, we got to wait another 30 days before you can lock it. Right? That's like a 60-day closing plus, right? So that might not work. So that's why I say worst case scenario, but it's there. Okay. All right. Oh, what the heck is this? Where'd this come from? I don't even know what this is. Kind of. That was weird. Sorry, I don't know where that timer came from. All right, cool. So again, this is what you focus on, the APR. It's on page 3 of the loan estimate. A lot of people make this mistake, right? A lot of people get a really great rate. Like this happened to me before where, hey, Larry, I got this lender who actually can give me a better rate than you did. I'm like, can I see the loan estimate? And they sent it to me. I'm like, okay, yeah, the rate is lower, but your APR is higher. And they're like, what does that mean? I'm like, you're getting charged more, bottom line, in general. They're like, how's that possible? Well, you're buying down the rate, right? If you look at page 2, you actually see the discount points. So even though they're showing you a lower rate, they're charging you for that rate. In fact, if I decide to charge you for the same rate, I can actually charge you less. They're charging you $2,000. Mine's only $1,200. So yeah, I can give you the same rate if you want, and I actually will charge you less. So in actuality, I'm actually still a better deal. Again, look at the APR, right? And actually, because I have people, sending me these rates that are locked by other loan officers trying to compete, and I laugh at it because they're trying to move the numbers around. They're trying to trick you, right? So I actually wrote an email, and I save the email as a template for people who send me. Or they tell me, oh, well, this guy has a better rate. I'm like, well, what's the APR? Oh, I don't know. So, well, you need to lock it and find out, right? And I send this email to explain to them why it's important. Okay, first you got to focus on the origination charges because again, someone might have a lower rate, but they're charging you for that, right? See, they're charging you for that rate. See, and then make sure it's locked. Right, this one is not locked. You see how this says no rate locked? No, that means this is an advertisement. You might as well look at this as toilet paper. They're just giving you an advertisement. That's it. There's no real number there, right? Because they can tell you 3.75 today, and you say, hey, you know what? I'm gonna lock it. Oh, sorry, the rates actually went up. They're now 4.5. Okay, so you need to get it locked before you know what the number is. Basically, nothing set in stone. It's just like a contract. Nothing. You can talk all you want on a contract. You can shake hands and discuss terms, whatever. If it's not signed, it's not a real contract. Same thing with this. It's like a contract. Okay. So again, nothing's real until this says yes. Okay. Again, APR. The APR, however, is a more effective rate to consider when comparing loans. This is from Investopia.com, which is an authority on finances in general, right? Again, the APR, however, is the more effective rate to consider when comparing loans. The APR includes not only the interest expense on the loan, but also all fees and other costs involved in procuring the loan. These fees can include broker fees, closing costs, rebates, and discount points. See, discount points. These are often expressed as a percentage. The APR should always be greater than or equal to the nominal interest rate, except in case of specialized deal where the lender is offering a rebate on portion of your interest expense. Now that one is kind of confusing, but basically it's just telling you that you have to look at the APR as a comparable because it talks about the whole thing as a annual percentage. The whole cost of the loan is the annual percentage versus just an interest rate. Okay, right here. The scenario most confusing to borrowers is when two lenders are offering the same nominal rate and monthly payments, but different APRs. And I talk about this, or this happens to me all the time. Like the guy gave the same rate or better, and like why is it better, but the APR is higher? Well, because the lender with the lower APR is requiring fewer upfront fees than offering a better deal. So that means the other lender who gave you a lower rate is charging you more fees. I'm charging you less upfront fees. Again, APR is how you find this out. Okay. The bottom line, while the interest rates determines the cost of borrowing money, the APR is a more accurate picture of total borrowing costs because it takes into consideration other costs associated with procuring a loan, particularly a mortgage. When determining which loan provider to borrow money from, it is crucial to pay attention to the APR, meaning the real cost of financing. Okay. Like I said, everyone says, what's the best interest rate? Or how do I get the best interest rate? Or what is the interest rate? That's the question they ask. What is the interest rate? I'm like, you're such an idiot. You need to ask what's the APR, not what's the interest rate, because interest rate could be whatever you want it to be. You know what I'm saying? You're basically asking to get lied to, like I said. So if you're going to shop for a mortgage, ask what is the APR, and that is going to give you a way better comparative number when you're shopping for the best deal. Right? Again, I can tell you it's a 4. Someone tell you it's a 3.5, and you're like, "Holy crap, I'm going with the 3.5." But then they're charging a whole bunch of stuff in the back end. You don't know about it, and you actually end up screwing yourself and going with the worst lender, and cost more. So again, don't make your decision based on interest rate. Make your decision based on APR. Okay. Again, I'm pretty sure I've lost loans because of that. I've lost loans because they asked me about my interest rate. I told them the interest rate, and then they went and talked to another person. And the person poured honey in there and gave them like a crazy interest rate. And remember, they're like, "Oh, I'm going with this guy. This guy's way cheaper." Wrong. The guy lied to you. He basically bait and switched you and faked you and charged you money in the back end, and you went with the worst lender that's more expensive. Okay. So pay attention to APR. That's going to save you thousands of dollars, by the way. Point of the video, right? So again, I'm going to go over this again so that you can, in this crazy market, save $1,000. Okay, it's going to take extra work and time. It's going to cause delays and extensions possibly, and you must be willing to deal with 2 LOs. And I'm telling you, it's not recommended with bad loan officers. Okay, like someone who doesn't reply to their emails or phone calls, or there's lazy, whatever. You got to work with someone who's like on the ball. They're ready. They're ready to go. They are motivated to win your deal. Okay, that's who you want to work with. Okay. Um, Okay, cool. All right. Once you have a lock rate, keep your favorite loan officer active. Okay. So now you have a locked loan to submit and a floating rate. That means you have 2 loan officers working for you. One of them is locked, so you're protected if the rates were to go up, right? Because that's why you lock it. But the rates were to go down, well, you got the floater loan officer here to help you. Okay. If rates drop, boom, you go with the favorite low. And if you're locked, you're safety. And floating, you have the option to lower. You're guaranteed to get the best rate no matter what the market does. That's the idea. That's the point. There's going to be a time, maybe not today, maybe not next month, maybe not next year. There's going to be a time where there's going to be people buying a house, locking rates because they don't want the rates to go up, and the rates are going to go down. And they're going to be like, holy crap, I'm stuck with this high rate now. Well, if you employ the strategy, you have nothing to worry about. Okay. And I've actually had loan officers call me, and they go, well, I watched your video. Why would you tell people this? Why would you encourage people to float? Why would you tell people that they should get a second loan officer involved, whatever. And I'm like, because that's how they get the best rate. They're like, but isn't that like counterintuitive? Isn't that going to cost you business? I'm like, listen, if it costs me business, it costs me business. I don't want to take a bad deal. I want my clients to get the best situation possible. I want them to be happy. Number one. Number two, I also want a chance because there's going to be a lot of people hearing my message and they're already pre-approved. They're already under contract. They already have another loan officer. And I'm saying, hey, use me as your possible backup. That's why I'm doing that. So even though I might lose business because of it, I also might gain business because of it. Either way, I'm still doing the right thing, right? By giving people the opportunity to save money, save $1,000 on their closing costs. The whole point of this video, right? So I'm actually telling you, yes, use another loan officer to save yourself thousands of dollars. I'm okay with that, right? Because I'd rather earn your trust. I'd rather be honest with you and give you facts and actual content and value on how to save yourself $1,000 on your loan, even if it means not working with me. You know what I'm saying? Because I'd rather lose the battle to win the war. I'd rather lose a deal to someone else to earn your trust so that maybe later on you'll give me another chance and another chance and another chance. And I'll try to earn my right to be your loan officer every single time. Right? As long as I'm part of the conversation, I'm happy. And that's what I'm trying to do is stay a part of the conversation. Okay. Sean says, perfect mindset, Larry. It all comes back around and the client's benefit. Yes. Thank you, Sean. And in reality, if it doesn't come back around, that's cool. I've always told people if I save people money and help them get a better situation, especially veterans, I can sleep better at night. I felt like I did my duty. Okay. So I'm cool with it. I want to help you. That's why I call myself your mortgage insider. That doesn't mean you're doing your loan with me, mortgage insider. The only time I'll be your mortgage insider if you do loan. No, again, I've actually said crazy stories. I've saved other people thousands of dollars on their loan and they didn't even use me as their lender. I do it all the time. People say I'm stupid. People say I'm crazy. Maybe, right? Maybe I'm too honest for this business. But the truth of the matter is, I feel good when I do it, right? I feel like I am contributing to society. I feel like I'm a good part of the community. I'm a great citizen. I deserve my place in heaven when I do things like this. Okay, that's how I feel, right? And I feel that if I do this, there's a chance that you'll keep me around because you're probably going to do 7 more purchases or 7 more mortgages in your lifetime. At least I'm a part of the conversation. That's the whole point. Right? You'll trust me. You'll know that I'm willing to give you honest information. I call it a gauge of honesty. And you're going to keep me around because you know that you're going to get facts when you talk to me, not an advertisement. Okay. So that's why I do that. That's why I'm willing to do this. Okay. And the truth of the matter is, I've had people who know I'm more expensive. They actually say, Larry, you actually have a higher rate, but I like you. So I'm going with you. Or Larry, no matter what happens, I'm going with you because I trust you, because you're highly recommended, because I know that you're going to do right by me, even though I'm higher in rate or whatever. Okay. So maybe what I'm trying to do is I'm trying to show value so that maybe my fees are worth it. One way or another, I win. One way or another, the client wins. Okay. So yeah, that's how you save $1,000 on your mortgage. Not just in cash reserves, but also in the actual total cost. Look at the APR, guys, not the interest rate. Okay. Again, when I hear what's the best interest rate, when someone asks me best interest rate, I basically like roll my eyes and I kind of laugh in my head because I'm like, this person knows nothing. And they're probably going to get screwed over because that's what they think they're supposed to look for. And I can try to educate this person, but they're probably not going to listen to me anyways because they're thinking that I'm telling them this because I'm a salesperson and not really educating them. Right. But I feel bad whenever I know people left me for someone else and they're going to get screwed over. But I mean, I'm just a salesperson to them, so they're not going to listen to me. So that's why I broker trust. That's why I try to educate. That's why I try to teach these classes so that you know that I'm someone that you can rely on to give facts so that when I quote you, I'm quoting you the real numbers, not an advertisement, right? I'm not trying to trick you into working with me. I'm actually telling you the actual answer to your question and letting you decide what you want to do. Okay. All right. So I actually talked about actually, I guess I'm going to skip this. I don't want to talk about this because I talk about this many times in other videos. But basically, I'm just trying to sell to you why you should work with a certified veteran mortgage advisor. Let's just put it this way: we give a shit, right? Last but not least, I care. Okay, and there's more to it, but that's the bottom line. Also, I don't know why this thing is timing is so weird. I'm going to talk about the little thing about the quiz, not the quiz, the how to save 500. But before that, I want to answer any questions. Again, you can unmute yourself or you can type in the chat if you have any questions. If not, then I will move on. Actually, remember how I talked about this? The way you do this is I actually have a quiz I created. My company, my branch approved this. If you were to pass this quiz, you will get credit $500 off your closing costs, and it'll be you'll be given a certificate. But now you don't need the certificate. You just gotta tell me, hey Larry, I'm buying a house now. Here's my application. Yada yada yada. Also, I did pass that quiz. I'm like, cool. I'll make sure that we give you a credit of $500 towards your closing costs. Okay. It's a quiz. So basically just call me or text me or email me, ask me how do I take the quiz, and I'll send you the link. And then that's how we can get started. Okay. All right, cool. So if there's no more questions, you can always reach out to me. If you do have any questions later on, or if you're shy, whatever, 832-606-2193. You can email me literally at openmortgage.com. You can book me at homeloandate.com. Basically, make sure that I'm available for you as an appointment. I basically set appointments with my referral partners and my clients, and that's the same place that you can book me at, right? You can look for reviews and info at Linktree/Larry Lee, or if you forget all that, you can always Google Larry the Mortgage Guy, and you'll probably more than likely find me. I kind of did that on purpose. Like basically, if you put Larry the Mortgage Guy, I'm going to be in there. There might be another Larry the Mortgage Guy out there, but if you put Larry the Mortgage Guy Dallas, you're definitely going to get me. Okay? And plus, you'll see my face, so you know it's me. All right. All right, cool. Thank you. I really appreciate it. If you have any questions, again, give me a call, text me, email me, whatever you like. This is Larry, the Mortgage Guy, your mortgage insider. I'm out.